Welcome to another S&P 500 analysis. Today is April 17, 2021. The S&P 500, along with most of the major market indexes, made new high last week. The pullback that eluded me has not shown up yet, and I was caught on the wrong side of the market. In this video, we'll look at the price action of the S&P 500 and the other major market indexes, the market sentiment, market internal, and see if a pullback for the S&P 500 will happen soon. And I will also give you an update on the trade that I put on the week before in anticipation for the pullback that did not show up last week. Stay tuned. On this weekly chart of the S&P 500, we see it is still in this accelerated move up outside of this long-term megaphone channel. And for the week, it has a range of somewhere around 76.5 points. And it gained almost 56 points or 1.36%. It is still trending above this 10-week moving average and also this 40-week moving average. As you can see, it is continuing putting the higher low, and that is continuing the one-time framing up. So on a weekly trend basis, it is still up. Now let's go and take a look at the market sentiment and the market internals before we take a little bit more detailed look of the S&P 500 price action. In this sentiment chart, we see that the VIX is still hovering around the 16 area, closed at 16.25 for the week, and is below this 20 level. And the put-call ratio, again, is basically been hovering between this 0.5 and 0.55. It closed the week at 0.55. For the New York Stock Exchange up-down volume ratio, we see that on Tuesday and Wednesday show a divergence. And throughout the week, even on updates, in this record run week, the up-down volume ratio was less than 2 throughout the week. And it finished at 1.79 on Friday. And for the daily advanced decline, we also saw a similar type of divergence for Wednesday and Tuesdays, just like the up-down volume. And not a single day throughout the week that has more than 1,000 more advancing issue than declining issue. And that is in a week that the S&P 500 made continuous record high. And it finished with a 456 more advancing issue than declining issue on a record closing high. The New York Stock Exchange did finish the week with 409 more new 52-week high than 52-week low. The NYSE cumulative AD line continues to trend with the S&P 500, no divergence. The NASDAQ 100 for the week, it gained 186 points or 1.35%. And looking at the up-down volume ratio, you can see that throughout the week, only Tuesday it was positive, and even that it was less than 2. It was sitting at 1.46. And on Friday, when it closed with a record high, the up-down volume ratio was actually negative. It's finished at negative 1.08. That means there were more down volume than up volume. And the daily advanced decline also showed a similar type of divergence as the New York Stock Exchange daily advanced decline for the week. It showed a negative divergence on Tuesday and a positive divergence on Wednesday. But the showing is pretty much anemic. Throughout the week, the only time that it made 1,000 on the AD is on Monday with 1,000 more declining issue than advancing issue. And looking on Friday, it actually closed with a record high, and it had 367 more declining issues than advancing issues. And the NASDAQ new 52-week high, 52-week low show only a modest 156 more new 52-week high than 52-week low on Friday on a record closing high. And throughout the week, you can see that it is all below. Every day is below 200. So that is not a very strong sign of a market making new high. And the cumulative advanced decline line for the NASDAQ continued to show this negative divergence. So from the sentiment and the internals, market participants are getting too comfortable for too long, and they are continue to put on risk. We know the market will likely strike when majority of the participants are least expected. The internal are not expanding in strength. The up-down volume ratio remained to be low, and the advanced decline is not showing broad market participation in this record run. The negative divergence on the NASDAQ cumulative advanced decline line is telling a very different story than the index. Now let's go and take a look at the price action of the S&P 500 and the other major market indexes. Looking at this daily S&P 500 chart here, we see that the price booked this 100% major move of this bull flag. I was anticipating last week for a pullback toward the upper trend line here, this upper channel trend line, and possibly get back to this 78.6 near the 4,058 or 4,060 level. As you can see, it did not pull back at all. As a matter of fact, it pushes up and came up to this 127 extension near the 4185. That was pretty much the expected move, and also the upper stop loss target that I put on a trade that I gonna update you later on in this video. So you see that it came up to this 127 and closed with a new closing high at 4,184.71, and also put in a new all-time high. So for next week, if we see the S&P 500 continue to push higher, then the next level that I'll be watching will be somewhere around this 4,221 or this 141 extension. But if it decides to pull back finally, or get a little bit of a pullback, then I'll be watching this 100 level. I mean this 100% major move of the bull flag back to the 4,114 area, and essentially that will be in confluence with this upper channel trend line. And if it doesn't stay above this channel and decide to pull back in, then once again I'll be looking at this 4,058 near the 78.6. So let's go and measure some of the percentages to see what the percentage will be if the S&P 500 pull back to this level here at 4114, and that will be less than 2%. And that will basically come back down to this upper channel trend line. And if it decides to come back into this 4,058 level, and that will be only represent a possible 3% or so of a pullback. And if it come all the way back down to this 4,020 or near the 618, and see what that percentage might be. And that we see that it's only represent about 4%. So it doesn't get down until it to 5% until it get down to this level here near the 39.74, and a whopping correction if we do decide that it will come back down to somewhere around this 37.20, and that will be all 10% or so correction. So those are some of the potential percentage and level where we might see the possible correction or pullback. So next week we'll see, will we even get a 2% to of a pullback. So I'll be watching this 4,100 area, this essentially this upper trend line, upper channel trend line for the most immediate pullback support level. And of course the upside will be this 4221, 4,021. And don't forget, there is this headline round number level at 4,200. It's a what I call a evening news headline number. And for next week, the option market is projecting a expected move in the range of 4,244 to 4,126. So the option market is not even projecting it for it to pull back to this 4,114. So we'll see. It's not always correct, like I said. Looking at the daily chart here of the NASDAQ 100, we see the NASDAQ 100 also closed with a new closing high and also made a new all-time high last week. And on Friday, finished off with a sort of a hangman doji. And right now, we're basically looking for a pullback, a possible pullback coming down to this 100% major move of this bull flag here that I joined in. And that is 13,717. So if it come down and tag this, then we'll see, would it be able to get a bounce, or would it come down and fill this gap here and possibly move itself down to test this 13,483. Then for the upside, I'm basically looking at this 141 major move at 14,167.90. So we'll see would that happen or not in the coming week. Now also the market, the option market is projecting a expected move in a range of 14,302 to 13,781. So it is going to try to get above this 141 and essentially probably get near this 1618 major move on the upside. And then on the downside, it's not even projecting it to come down to this 100% major move. So we'll see again, the option market is still pricing for it to move higher in the expected range. But we'll see, again, like I said before, this is not always correct. It just gives us a projection of what the market participant in the option market is expecting this index to move. Now, if we also take a look at the percentage on some of these pullback move here, and we could look at this right here, just do a little bit of an approximate. And if we come down to this 13,717, we're talking about a little bit over 2% pullback. And if it come down to this 13,483, and we're talking about somewhere near the 4%. Russell 2000 had a gain of 19 points or 0.86% for the week. And right now it is trying to work itself back up to this upper channel trend line near the 2296, 2297 area. So if it could break through this 2297 area, then I'd be watching for it to make a play at the 2360, the all-time high there. And if it doesn't make it up to this upper channel trend line, I expect a pullback down to this level near 2194, 2195 area. So now the expected move for the Russell 2000 next week is 2310 on the upside and 2214 on the downside. For the Dow Jones Transportation, we see the Dow Jones Transportation put in a new all-time high on Friday, but it did not close with a new closing high. And for the week, the Dow Jones Transportation actually lost 38 points or 0.26%. So if the Dow Jones Transportation continue to move upward, then I'd be expecting this index to move toward the upper channel trend line and get near this 15,500. But if you decide to continue to pull back, then I'd be looking at this 14,242 level and fill this gap here, this small gap here. Now, there is no expected move for the Dow Jones Transportation because there are no options traded for this index. Looking at the Dow Jones Industrial, we see the Dow Jones Industrial close with a new closing high and also put in a new record high, intraday record high on Friday. So right now it's tagging this 78.6 major move of this bull flag here. And if it continues to move up, then I'd be watching for this 100% major move at 34,751. But on the downside, if it pulls back, then I'd be looking for this 618 near the 33,727, which is also in confluence with this upper channel trend line. And if we could not stay outside of this price channel and dips back inside of this channel, then I'd be looking at this 33,000 level here for the next potential support and essentially to come down and fill this gap. And the expected move for next week, the range is 34,558 on the upside and 33,844. Now let's go and take a look at some of the percentage for these pullback move. And if we are taking a look at this little bit approximate, if it pull back to this 33,727, we're talking about maybe somewhere around 1.5%. And if it come down to this 33,000 level, we're essentially talking about 3.5% or so, 3.6%. And before I go in, give you an update on my trade, let's take a look at the SPY, the ETF for the S&P 500. As you can see, I have this composite volume profile for this uptrend here. And looking at here, you see that there is a high volume node here. And also here, right? These are a little bit of a high volume zone that we anticipate if the price come down, we probably will find some support. And here are these cluster of high volume. And these are the area that we'd likely to see a little bit of a chop because that's where the buyer and the seller find price to be acceptable, to to be fair. So right now we're essentially looking at these levels here and see would it be able to find some support. So if we're looking at this 100%, pullback to this 100% major move of this bull flag here, and we're essentially looking at 410 for the coming week. And if it continue to push up to this 141, then we are looking at this 421. And next week, option market is pricing in a projected move in the range of 423 on the upside and 411.45 on the downside. Now let's go take a look at the trade that I put on for last week, anticipating a pullback. Just a little bit of a reminder. Remember, I was basically looking for a pullback to come back into this area here near the 4,060. And I set up a butterfly basically targeting the 4070. And also the trade was in anticipation of if I am incorrect, then I'm looking for this thing to essentially come up for the 127 near the 4,184, 185 area. And that is also the market expected move in that 4185 area. And as you can see, as the market got closer to that expiration day, it actually came up and tagged that expected move of 4183. And I tweeted that out, the day before and put in the what the market was expected, for Friday's price movement. And it did came up near the close and come up and tag that expected move on the upside. So that's basically what I was looking at. And I was also the other thing, the criteria was essentially I get stop out at 41.85, or I will start taking profit if it come down to 40.70. And also in addition to that, is neither of those price level are met, then I will basically exit my position the day before the expiration, which is on Thursday, right? It expires on Friday. So that's essentially what I did. I closed out the position on Thursday. So it's almost 100%. And I did say that, during my weekly, my midweek video, I did state that I do anticipate that the possibility of 100% loss. And at best, I said at best that I might break even, which it did not. On Friday, this thing just continued to melt up. So anyway, that's the basically that's what happened to the trade. Took that loss, but also in addition to that, I also mentioned to you that I stack up on couple additional butterfly to anticipate that yes, I could be wrong on the timing. So essentially, if the market does decide to pull back, then I will have additional butterfly to try to catch that pull side, that pullback move. So let's go and take a look at how that is doing and what do I think that it might do, because right now it's not looking good. But in either case, you plan your trade, you set up the risk that you're willing to take, and then you let the trade, play itself out. Don't try to go and second guess yourself or manipulate, micromanage the trade while the trade is on. Because if you constantly do that, then it just kind of ruin your result because you will never attain consistency because you do not have a consistent trading plan. So if you have a plan, set up the trade based on the plan and let the plan make its trade. Okay? So let's go and take a look at that. And once again, right? Once again, not all trades are profitable. I know you probably accustomed seeing all these YouTubers out there showing you how they profit from every trade and they never show you a losing trade. Isn't that remarkable? So here's the butterfly that I set up. I set it up at with a debit of $5 and it's worthless on Friday expiration. That was the risk that I'm willing to take. So the butterfly was essentially, with the short strike at 40.60 and the long put at 4100 and 40.20. Now let's take a look at the other two butterfly that I still have. Right now, I'm basically looking at this, the next week's expiration butterfly that I'm short the 4085 strike and I'm long the 4125 strike and the 4045 strike. These are put butterfly. Okay, and looking at this risk profile, I kind of find it hard to believe though, but it said that I'm still breaking even on the day before expiration on the 22nd. Even though the SP 500 is up at 4,140. So, but I'm just kind of looking at this profile to see, and right now at this 4126, these are the expected move range here, right? I have the 4244, that's the upside expected move, and the downside is 4126. So even if it comes down to 4126, they say that I am still profitable, $235 ahead. So we'll see, but kind of give a look of how the profile, the risk profile looks like on this butterfly. Now, I also have the other one that is expired the week following next week. That's on the April 30th, right? And that one, I'm also long the 4,120 put and short the 4,070. See, I'm still targeting that 4,060 level, that 618. Remember that retracement or the major move extension of that bull flag. I'm still targeting that 4,058, 4,060 area with the 4,070. And then I also long the 4,020 and basically just, do the balancing of the spread. And this one is, pretty much a 50-point spread instead of the 40-point. Okay. And if I combine this and we'll take a look at what the risk profile look like for next week, you can see if it come down to, or go up to the expected move of 4,244, then I'm pretty much, near that 100% loss here on these two butterfly. But if you could see here at 4126, it tells me that I'm be ahead a little bit over $400 on these two butterfly. So we'll see, let it play out and see what happens. So once again, here, the one that expires next week, I will close it out on Thursday before the close if it doesn't hit my target level. And then we'll let the April 30th one continue to play itself out until the following Thursday or until it hit the target objective. Okay, so that is the trade. Yes, it sucks when you get caught on the wrong side, but hey, that's the price you pay when you're trying to anticipate a little bit. And but again, plan your trade. Make sure you don't, oversize your position and risk more than what your plan say you're risking. So be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.